Today, we're going to go on a journey, and not just through economics, but through history itself. We're going to connect some dots that might seem random, but they actually form the bedrock of one of humanity's most important and maybe most misunderstood inventions, the stock market. You know, we live in a world where we can trade stocks from around the globe in seconds, right from our phones, where one tweet can send the whole system into a frenzy. But underneath all of that modern chaos is a story that goes back over 700 years. A story of incredible ambition, risk, innovation, and yeah, a lot of crisis and reinvention.
Because, and this is really important, the real story of the stock market doesn't start with the skyscrapers of New York City or those flashing tickers you see on TV. It doesn't start with billion-dollar hedge funds. Nope. The real story is, well, it's a lot simpler. It's raw. And honestly, I think it's way more interesting. It begins on the dangerous open sea, with massive wooden ships, daring merchants, and one single, profoundly important question. This question right here is the whole reason the stock market exists. It wasn't born out of some desire for complex financial engineering. It was born from the very real, very terrifying possibility of losing everything you own in one catastrophic event. It was, at its core, a question of survival.
Okay, so let's dive into this first chapter. Long before we had anything called a stock, we had trade. But trade back then, it was unbelievably dangerous. I'm talking pirates, killer storms, disease, shipwrecks, wars, you name it. It was the highest stakes game imaginable. So what they came up with was just brilliantly simple. Put yourself in the shoes of a merchant in 13th century Venice. You could fund a single voyage to Egypt that might make you 5 times richer, but a bad storm could wipe you out completely. So what did they do? Well, these merchants, in places like Venice and Genoa, they started to slice up the risk. Instead of one person funding an entire ship, they'd sell off little pieces of the voyage to other people. If the ship came back loaded with treasure, everybody got their cut. If it sank to the bottom of the sea, well, everyone shared that loss too. Now, of course, nobody was calling this a stock or a share back then, but that's exactly what it was. It was the very first seed of the whole idea. And you see, it wasn't born from some academic financial theory. It was born out of pure necessity. It came from that very human need to share a massive burden so that you can achieve something way bigger than any one person could ever do alone. So the big question is, how did this simple idea, sharing risk, morph into something more formal? Well, it needed a home. It needed a real, physical marketplace where these newfangled instruments could actually be bought and sold. And that place was probably not where you think.
Look, it's true that New York is where the modern stock market really grew up, but it's not where it was born. The real cradle was Antwerp in what's now Belgium. Back in the 16th century, its Beurs was the world's first real exchange. Merchants there were trading not just goods, but contracts, debt, and, this is the key part, stakes and commercial ventures. They were trading pieces of paper that could be transferred, that had a price that went up and down, and they were all about future expectations. But the real revolution, the moment that changed absolutely everything, that happened in the Netherlands.
I want you to burn this year into your brain. 1602, March 20th to be exact. On that day, the Dutch East India Company, or the VOC, was created. And listen, this wasn't just some other company. This was maybe the most powerful economic force in human history, all because it was the very first company to issue public shares. It allowed thousands of ordinary Dutch citizens to buy a tiny piece of the action. Just stop and think about what that actually meant. In an age with no electricity, no internet, no mass media, some farmer could own a piece of an organization that had its own army and navy, that could sign treaties like a country, and that literally held a monopoly on all trade with Asia. All of that immense power was packed into a single piece of paper, a share certificate. This moment was a fundamental shift in how the world worked. Suddenly, national power wasn't just about land or armies or taxes. A whole new kind of power was born, power based on capitalization. The VOC was arguably stronger than the Dutch government itself because it was funded by the capital of thousands and thousands of shareholders, and for 200 years it dominated global trade, all thanks to this new financial model. And just like that, Amsterdam became the first true modern stock market. It had it all: shares, daily trading, brokers, liquidity, price quotes, speculation, and yep, even market-moving rumors.
The rich folks would invest for the long haul, collecting dividends from successful voyages. But other people with a little less cash, they started surfing the waves, which is basically what we'd call day trading. Seriously, short-term speculation was born right there in Amsterdam, right alongside long-term investing, over 400 years ago.
But of course, you can't have a system this powerful grow without some painful lessons. The history of the market is also a history of its crashes. And these weren't just failures. They were brutal, but absolutely necessary catalysts for change. You know, just like a kid can't learn to walk without falling down a bunch, the market couldn't mature without its own devastating stumbles.
And we see this pattern again and again. First, you have the famous tulip mania in 1637. A simple flower becomes the focus of this insane speculative bubble, where a single bulb was worth more than a house. When that bubble popped, it taught the world its first big lesson. An asset's value isn't always rational. Sometimes it's just about what the crowd believes. Then, of course, the great crash of 1929, a crisis born from nothing but misplaced faith that just evaporated. And more recently, the 2008 crisis, driven by these super complex financial products that, let's be honest, almost nobody understood.
But here's what's so crucial to understand. It's the cycle that happens after every crisis. A massive weakness is exposed. The system is forced to learn a painful lesson. Then new rules and safeguards get created, like the SEC after 1929, or new global risk rules after 2008. The market doesn't just die, it actually comes back stronger, smarter, and more resilient. In its own weird, painful way, every crash has helped forge the financial system we have today.
This quote, man, it just perfectly captures the heart of the 2008 crisis, and really every crisis. It's the fundamental challenge, right? The system is always playing catch-up to human ingenuity and, well, human greed. The rules are almost always a reaction to a disaster that's already happened. It's this never-ending race.
So all of this brings us to a really important question. After all the turmoil, all the risk, why do we even have a stock market? Why did we invent something that can make people rich so fast, but also wipe them out just as quickly? Well, the answer is actually pretty simple, but it's also incredibly profound.
The stock market exists to solve what is maybe the greatest paradox in all of economics. Society's needs for new technologies, for infrastructure, for progress, they're gigantic. But the amount of money any single person has, or even a single government, is limited. The stock market is the bridge that connects those two things. It allows a tiny company with a great idea to become a global corporation, and it allows an ordinary person like you or me to become an owner and investor in that growth.
Just try for a second to imagine a world without it. How would companies get the money they need to build new factories or hire thousands of people? Who would fund all the risky long-term research? Forget about companies like Apple, Microsoft, or Amazon. Their scale would be totally impossible. Progress in medicine, in aviation, in technology, it would slow to a crawl. An idea would take centuries to become a reality, not just a few years.
So here's the bottom line. The stock market is not a casino. At its very core, it is the single most effective machine for allocating capital that human beings have ever created. It takes resources from people who have them and directs them to people and ideas that can create value, create jobs, and create innovation. It is, quite literally, the engine of our modern civilization.
And when you really understand this history, you start to see that investing is about so much more than just numbers flashing on a screen. Every single share you buy is an investment in a belief about what the future will look like. Every trade you make is a tiny piece of economic history being written in real time. As investors, we are all participating in this grand, 700-year-old story, a story about taking risks to build something bigger than ourselves.
So, I'll leave you with this final thought. The stock market is the place where our collective future gets its funding. Right now, as we speak, capital is flowing toward new ideas in AI, in biotech, in renewable energy, in fields that don't even have a name yet. The question for all of us then is, what future are we choosing to fund today?